You are in your 50s and you want to retire early one day. You don't know exactly when. I'm not saying you hate your job, but there might be a day where you're like, look, I want out. And some of you are like, look, I don't think I want out of this job. I think I just want to not worry about money as much. And I actually like this job. It's just the financial side that's causing me stress. And if I had a bad day, I'd want to know I could walk away. So if you are in your 50s or in your 40s or 60s watching this video, wondering how do I think about an early retirement if most of my money is in a 401k/IRA, going, hey, should I get some of those Roth dollars that people talk about? Do I need another account? Am I on track? That's what today's case study is going to be all about. Now, this is a real case study, a real couple that we work with today, just changing the names and numbers for security purposes. Now, if you look right here, this is who we're going to talk about today. They're a couple. They're 54 and 55. They have a child who's 20 years old. If we go to their investments, you can see here, they've got a 401k with $1.1 million, a superhero account. Some of you are like, I've never heard of that before. I just made it up. It doesn't exist, okay? It's just a nickname for what's called a brokerage account or a taxable account or an individual account. It's an account that you don't get any special tax benefits for when you put money in, but it's flexible. So if you want to retire before 59 and a half, go and look, is there some other way I can withdraw income until I can touch my 401k? This is a good option. We'll talk more about that. They've got $200,000 in cash. We'll have a conversation as to why. You can see they own their home and they've got a $180,000 mortgage on it. This is the case study we're going to walk through in today's video. If you don't already know, my name is Ari Taubleib. I'm a certified financial planner. I'm the host of the Early Retirement Podcast, and I'm the vice president here at Root Financial Partners. Hey guys, thanks as always for watching the content. I hope it resonates with you. This, please know, is not financial advice. Everything I do on this channel is for informational purposes only. Before you go execute any financial strategy that I'm discussing, please consult with a financial advisor, a tax professional, your legal professional. Please be smart about this. This is not financial advice, just for informational and educational purposes only. Now let's get back to the show. Two quick logistics before we get into the fun. So number one, you can see here that 75% of you are not subscribed to this channel. So if you're not looking for tax guidance and investment help and withdrawal and healthcare and just optimization around your money, definitely don't subscribe because you will not like these videos. If you're like, no, I want to retire early one day or I want strategies to help with that, I encourage you to subscribe so that you get notified with current and future videos. You can see an easy button to subscribe right there. The second announcement is I do hour-plus long shows live on YouTube. I do those on Wednesdays at 3 p.m. Pacific. So if you're looking for that, you can see here on my screen, these generally will go between an hour to 2 hours. This is a new type of content. Right now, the video you're watching, I know what you want. You want the info. Let me see the case study. I'm about to show it to you. This is if you're like, hey, I want some informal, fun education around optimization. I keep it lighthearted. It's a great time. You can go ahead and see. A lot of people like tuning into this type of content. So if it's of interest, you can check it out. Just click live right here underneath my channel. All right, enough of that. Let's get to the case. So with this couple, I had a few questions for them, and I always start with the same questions when I'm speaking to someone about financial planning. I'll go, look, would you rather work longer so you can spend more, or would you rather stop working right now, but it only means you can spend this amount? And some people, and this is what I want you to ask yourself, are like, look, I don't want $20,000 a month. I'd rather retire earlier. Would $20,000 a month be cool? Sure, but I don't really need that. That doesn't add to my quality of life. I would rather retire earlier and spend more time with my spouse and spend time with family and do what I want to do. Other people are like, no, to be honest, if I were to spend $6,000 a month, I'm really not going to be living my retirement. Like I want to travel and do fun stuff, and I feel like that's going to limit me. So I am not married to an early retirement. I don't tell people go retire early for the sake of it. I want you to know the earliest time an early retirement is feasible, and I do not want you mad at me when you end up working 2 years less than you should have, going, Ari, why'd I retire early? I don't have lifetime income. I'm like, I need to protect against that, which is why I say I'm the meanest financial advisor. I try not to actually be mean. I'm just very transparent because I don't want you mad at me going, I should have worked 6 more months, or I should have waited 1 more year, 2 more years to spend what I actually want the rest of my life. I also don't want you mad at me the other way when you're 75 or 80 going, Hey, all right, great. I've got 15 million bucks. I told you that's not important to me. Why didn't you tell me? I should have retired 3 years earlier when I was in a fine spot to do so. Because of this, that's why I love planning. Let's show you what I mean. So once again, this couple, 55 and 54, one child here, you can see these are their goals. They're like, look, we don't hate our jobs. We want to retire. We're thinking 58 and 56. Maybe we spend $6,000 a month. Plus, we've got the mortgage. We've got to somehow plan for health care. We want to take vacations. We just don't know exactly how much. But they do know that there's one huge vacation they want to do. They're very clear that they wanted this in their plan. So if you, all of you out there, you see the software I'm using, if you want to use this software, you can look right here inside of this academy. And this is ideal for those of you that are like, look, I don't need an advisor quite yet. I want to play around with this tool. Once you, of course, are closer to retirement or you actually have north of $2 million, that's where a team like us can help. But for now, most of you guys just go play around with the software, see where you're at, like you're going to see right now. The couple makes $185,000. Actually, one of them does. The other makes $65,000. They've got an Etsy business they run. They don't know exactly how much it's going to bring in, but maybe $30,000 a year. So when we look at their retirement and we're looking, are they on track? Could they make this happen? What you're going to see is a few things. So right off the bat, let me show you this. This is the couple. They've got about $1.3 million total, because they've got some 401ks, they've got some brokerage, they have some cash. And here's the tricky thing. The software is going, oh, you have cash. We could use that for your retirement. But the software doesn't know that this couple, they want to do a home remodel. So really they have 1.3, but I wouldn't recommend actually including that in the plan. So you can see in their bank account here, what you can see, it says included in plan, yes. I want it on the balance sheet, but I actually don't want it included in the plan. So I'm actually going to put it to no here, and I'm going to save that. So when I go back to the retirement plan, you can see here, let's go back, and these are just little tweaks, things you want to be aware of. Well, now it's not 1.3, it's 1.1. So I'm excluding cash from their actual retirement because I don't want to include that in their assets. And you can see here, their plan looks okay. Now you can see here we are, we're working, we retire, and now all of a sudden our money's going down. And the reason it's going down is because now we're spending some of this money. At the same time, we've got healthcare, we haven't included travel in here. So their plan looks like it's straight line, looks like they're going to be okay. But this is not a graph I would let anyone retire on, which is why not everyone loves me for this, but I will say, I just don't want you to run out of money. Don't want you to be mad at me if you retire too late or too early. This graph looks good. I would not let anyone retire on this. Some people go, why? Looks pretty good. I go, well, this makes it seem like you just get average return. It's super simple, but that's not real life. And in real life, this couple gets to make some decisions. So the first thing they get to do, and I asked them this, I said, hey guys, would you rather work longer to spend more or stop working right now, literally at your current age, 55 and 54, but you can only spend $4,000 a month? And they're like, Ari, $4,000 a month, like we couldn't even do remotely what we'd want on $4,000 a month. I'm like, I get it, totally get it. Once again, I get it, but I want to show it to you anyway. And they're like, look, $3 million at age 90 would be pretty cool, but in reality, I showed them this. I go, look guys, if you really stopped working today and you spent $4,000 a month, you'd be okay, but you just told me you wouldn't be happy. And they're like, well, why'd you just show me that? I said, because if you work until 58 and 56, like you guys are discussing, and you spend $4,000 a month, you're going to have $3.7 million at age 90. How does that sound? And they're like, yeah, I don't know if I want to leave my kid with nearly $4 million. I mean, I think they'll like not work hard and go do something they shouldn't do. And I said, okay, would you rather spend more? They go, yeah. I go, how much? They're like, well, we like $6,000 a month. That sounds good. I said, okay, what about vacations? Is that included? They're like, yeah, that's something we need to talk about. I said, let's say $20,000 a month. Well, what does that do to the plan? Well, $20,000 a year. You can see if this couple works until 58 and 56, $6,000 a month, so $72,000 a year, that's the basics, plus they have a mortgage of about another $2,000. So they're really about $100,000 a year before vacations. You add in vacations, they're okay, but it's showing that they're going to be 90 with $273,000. cuts a little close for me. So what you can see is they have a few options. They could say, we're going to spend less. We're going to only spend $5,000 on vacations. They could say, I'd rather work another year. Let's say both of them work until, 59 and 57. And let's see what the plan looks like now. Well, now it looks way better, $878,000 more dollars. So here's the trap that most of you are going to do, which now you're not going to do because you're going to hear this. Most of you go, wow, look at this, $878,000 more dollars. What if I work 2 more years? Ooh, what about 3 more years? 1 more bonus. How many of you have either discussed with your spouse or thought to yourself, I'm just going to do 6 more months. Oh, just 1 more year, 2 more years. You know what I call that? Goalpost planning, where you move the goalpost back and you just keep telling yourself, once I have 2 million, 3 million, 5 million, 10 million, I'm out. And you just keep moving it back. And so the question is, how much until you really have enough? Like, when are you going to be satisfied? And for many of you, it's never. You're like, there's no amount of money that's going to make me safe. Well, that's because you're a human and you're not a robot, but there's a confidence level. So I want you, if you are a client of mine, to go through this and go, what else are we forgetting? What about weddings? What about moving? Are we going to downsize? Are we going to go to a vacation home? Do we want to buy a business? Do we want to do more charitable giving? What is our legacy goals? How often are we buying new cars? This couple here hasn't built out their plan to the degree I would like, which is cars every 10 years, vacations every first 20 years. Maybe we're leaving $1 million to a child. I want you to really go around and play with this. And you can see I added one section for this couple. What if they get massages? What if they want to go to physical therapy? What if they do some part-time income? Ooh, look at this. What if it turns out they're like, look, when we retire, I'm just going to put in here, when this couple retires and maybe they find something they like doing. Maybe they do it for 5 years. Maybe they do it for 10 years. Let's just say 7 years. So they retire at 59 and they're like, look, I don't know what I want to do, but I'm going to do something. Some of you are like, I don't want to do something. I want to sail around the world. Great. That's cool. Others of you are like, I'm probably going to keep working, but maybe it's a less stressful job, or maybe my Etsy business does well. Maybe I bring in $40,000 a year. What impact does that have on the plan? Well, it's significant. I mean, $1.7 million more dollars from $40,000 a year. Now, some of you are confused right now. You're like, Ari, $40,000 a year, like, how does that make any difference? Like, I was making 200,000 plus during my career. So are you just like trying to hype me up right now? I'm like, no, I'm not hyping you up. It's not 40,000 I care about. It's 40,000 less that needs to come from your portfolio, which lets that keep compounding. So my couple is like, Ari, are you telling me bringing in 40,000 could be like bringing in 80 or 100? Because really it lets my $1 million grow even more. I go, that's exactly right. So I want this couple to look and go, wow, we're on track for millions of dollars. But at the same time, I want them to think through things a little bit more. Can we get massages? Are we going to physical therapy? What else could you do to improve your life? Add another $10,000 a year on that. What does that do to the plan? Well, instead of $1.7 million more dollars, there's still $1 million more dollars. This is them at age 90 with $2.2 million. And let's just recap what I've done. I've said, hey guys, would you please work 1 more year? So you don't work until 58 or 56. You're doing 1 more year, 59 and 57. You still get to spend what you told me is $6,000 a month. You told me that would be fine. You're spending $5,000 on vacations, another $10,000 on massages and PT, and maybe do some part-time income. But some of you are like, look, part-time income's a bonus. I don't want to rely on that. Great, let's take it off. Well, the reality is, if this couple said this is what we want to spend, this is where I'd say, hey, let's have a conversation. Because 1.3 million might seem like they're in a good spot, but if we go to this other chart, which is called withdrawal rates, this is what gives me confidence to tell someone they can retire. Because this is too high, 8%. You can't take out 8% of your portfolio. Now this drops, and why is this dropping? Well, because now we have Social Security helping us out. And so if we were to go out of this and look deeper, here's their withdrawal rate. It's in the 5% range. This is sustainable if you do everything right, but it's still a little too high for me. So in live time, why I love this tool, what if this couple says, Ari, you're right. It's $20,000 I want to spend on vacations. Well, now what happened to the withdrawal rate? 10%, 10%, 6%, and increasing. That's not sustainable. That's a sure way to run the risk of running out. So this couple can go, we're going to work until we're 62. And some of you are like, they probably don't want to do that. They might not want to do that. But once again, my job is to give them the options. So if they said, we want to work until 62 because we want to spend $6,000 a month or $72,000 a year, another $20,000 on vacations, another $10,000 on health, and do no part-time income, guys, they could retire at 62. Look at this, withdrawal rate 5% and decreasing. Now it's at 3-4%. I would argue this is maybe too low. And why is this increasing here? Any of you guys know? If you were live with me, I would make you answer. It's because of required distributions. It is now increasing. They're forced to take out more than they want when they're probably going to be spending less because they don't have their energy and their health. So you can see here, here's a couple that is in a really good spot. Maybe they're wondering, ooh, what about 61 and 59? Could we make that happen? Well, they probably could. They're in a good spot. Let's just look a little deeper. Well, their withdrawal rate, 7%. That's not sustainable, 6%. But then it's decreasing. Now we're in the 4% range. This is possible. So for this couple, I wouldn't give them a green light. I'd say, hey, let's talk deeper about these expenses and what you really want to do. But this is a couple that has the pieces to make it happen. There's just so many variables here. And you can see, I want to make sure if you are a couple like this, or you're going, look, I'm in a similar boat. I've got about $1 million. I want to know, where should I be saving? What I would encourage you to do is this couple, they have plenty of money in a 401k. That's not what I'm worried about. I want them to have more money in a superhero account. So oftentimes I'll recommend stop maxing out your 401k, just do until the employer match, and then the rest put into a brokerage account. So if you want, you can tap into that early. It's another avenue for income. So lots that we discussed today. Today is more high level on just, hey, how do you play with the software? Look at the tool, run some projections. I hope this was helpful. If you want more specific videos on, do I do Roth conversions? Should I buy umbrella insurance? What about health insurance? You can see all of that and more on these videos in this channel. I want this to be the best channel for your early retirement so you have total success. Hopefully this was helpful. And once again, please like this video if you felt it was helpful. Thanks, guys.